JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 26th of October 2020, so welcome everyone guys. Welcome to this Monday's morning session where we're going to have a quick look at the markets, a few of the charts, some of the charts that we looked at last week, just to see how everything's getting along. But as always, before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page right here. If you want, you can check us out here if you click on, if you go on jfdbank.com and click on the research tab right there on the top, and I believe you can find some useful information here. Now, jumping into the charts. Now, the first one I want to pick up here is on Nikkei 225. Again, not much is happening here, but the same idea remains from the one that I kept mentioning from last week. The potential rising wedge pattern here, as you can see, yes, we saw a bit of a decline today. The index did drift lower, however it still remains not only above this 21-day EMA but also above the or should I say inside this rising wedge pattern. So of course, according to all the TA rules, we know that these patterns tend to break to the downside, and yep, we could see this one pushing further south. However, we need that confirmation break first. We cannot really talk about the downside yet until we get that confirmation break. So in a way, the confirmation break here would come on a, well, if this lower side of the rising wedge gets violated, of course. And also previously I looked at this 23,272 territory, but given that we've shifted a little bit more to the right, probably I'll take a look at this level right here, the low of the 16th of October, near the 23,382.83 mark. So approximately around here. Now a nice good drop below this, yep, would confirm a forthcoming lower low, and further declines also could be possible. So again, there's a bunch of levels that need, or areas that need to be violated first before we could consider a move lower on this one. But that's of course if we do get a violation of the lower side of the rising wedge. If it continues, if it continues to hold this side here, if it continues to hold the price from moving lower, then the index could continue moving maybe a little bit sideways or maybe a little bit more to the upside here within this pattern. So that's why I'd be very careful. However, as I mentioned to you guys last week, if you remember, that preferably if you want to look at some higher levels, just probably wait for a push above the current highest point of October near the 23,725 zone right here, and then yes, we could take it from there. But at the moment, it is how it is. It's stuck here, so we're just continuing to monitor this pattern. Shanghai Composite. Now, the Shanghai Composite, we know that Hang Seng is closed today, but the Shanghai Composite is open, and yep, it's still trading. It still has around 50-something minutes left of trading here for today. So let's see where this is going to end, but for now, everything's kind of working out here according to the plan. Now, yet last week I said to you guys that if we get a nice drop below this 3,280 territory right here, then yes, there could be a chance for this one to move further south. We even got a slight fractional close below this, and today we saw this index opening with a gap to the downside, continued to drift lower. It tested this 100-day EMA perfectly, from which it kind of rebounded a little bit. However, the index still remains in the negative territory for today. For now, what I'm going to be aiming here for is first of all, of course, this level here, the low of the 30th of September, or in other words, the lowest point of September, near the 3,202 territory right here, and slightly below that we do have this upside support line taken from the low of the 19th of March here. So keep your eyes on that one, this upside support line could also be a nice target for this index. But again, like I said, for now, if the price continues to trade below this 3,280 territory, then we could see another slide here, another move lower, and that's the area that we're going to be aiming for. Now, if in terms of the upside, now previously I talked about this level here, but given that we've shifted a little bit more to the downside, now here I would prefer to see at least maybe a push above this barrier, above the high of the of last Friday, basically the 3,326 territory here. A nice good pop above it may open the door towards slightly higher levels, but again, all this is still very tricky. For now, this index is moving towards the downside here, so let's see if it can continue drifting a little bit more south. But if it suddenly climbs back above this 3,326 territory right here, then yes, this is where I'm gonna start maybe considering some upside, but still we'll be very careful with that, because again, we can see that last week, for example, I talked about this potential idea of a bullish flag, but as I mentioned to you as well last week, that although yes, it could be seen as that, we still need a confirmation break. We didn't get the confirmation break, and it kind of continued to drift lower. So that's why these are the situations, guys, where I kind of ask you to be very, very careful and wait for the confirmation break. The German index, DAX. Here the index, you can see that is, or should I say, on Friday it managed to climb back inside this rising channel pattern, which could be seen as a positive for, or not for, but by some of the buyers. But looking at the cash index right now, we can see that the price is back below the lower side of this rising channel. It's still above this 12,341 zone, but below this rising channel. So this kind of raises concerns about that upside scenario. So that's why, guys, for now, probably be very careful. As long as it's going to stay in this little territory right here in between these two lines, then I'm going to take a bit of a neutral stand. But if it suddenly starts dropping below this 12,341 territory, now this is where it could turn ugly for the buyers, guys, and this index could start drifting lower, because such a move here would confirm a forthcoming lower low. So that's why for now be very careful. Like I said, on Friday, yes, it climbed back inside this pattern, inside this rising channel, but looking at the cash index right now, we can see that the index is currently trading at around 12,425 zone, so roughly basically somewhere around here in this, near this 200-day EMA. So again, keep your eyes on that one. For now, it's, like I said, it's going to be quite interesting to see which way that's going to continue drifting. But if it suddenly drops below this 12,341 territory, now this is where, like I said, I'll start looking at some lower areas. In terms of the economic calendar as well today, guys, so as I've mentioned to you that the Hong Kong's Hang Seng is closed, New Zealand is closed or was closed, we do have some data coming out. So the German IFO business climate figures coming out here. The expectation is for a slight decline from 93.4 to 93. Again, not much happening in terms of economic data. New home sales from the US, something maybe you could keep an eye on, but still don't don't get me wrong, guys, still the main driver right now is the coronavirus and the headlines surrounding the coronavirus, because if negative headlines coming out saying that numbers are increasing, then that applies pressure right now on the equity world as well. However, if we see, let's say, positive news surrounding the development of vaccine, and that's what basically is driving the market right now. Also, the indices are waiting for the Trump-Biden kind of final standoff here, I mean the US elections. That's going to be quite interesting to see and how the markets are going to react. You can actually take a look at the material that we have prepared on our website as well, so check us out on the research page. We've kind of done a nice piece on that one, so you can have a read through. You can check that out. But again, for now, it's like I said, there's a lot of uncertainty, and at the moment, given that the indices are sliding a little bit, especially looking at these Asian ones, then yes, that shows kind of that the whole coronavirus situation is bothering the market. Now, jumping in further, silver is drifting lower. You can see that it broke this upside line, and now it's testing this 24.06 level, so approximately around here. But as I mentioned to you guys previously, that a nice good drop below that 24 mark, could open the door towards lower levels. So that's why for now, be very careful here. At the moment, yes, it failed to move above this 25.24 territory. It failed to kind of climb higher, but at the moment, it's leaning more towards the downside. However, let's not rush into anything yet, because what I don't want to see here is, let's say, this one rebounding here from this area, from this 24.06 territory, and then kind of climbing back up. So basically confirming a possible range here, a very tight, small range. But again, that's a bit of speculation. For now, the main idea is to consider maybe a possible break here below this 24 territory. But what I want to see is the full kind of candle, the body of the candle staying below that area, because what I don't want to see is a false breakout. If we do see that body staying below it, then there is a chance for this one to drift further south. WTI oil, now look at this beautiful move here, and last week I talked about this one, and I was saying that if we get a drop below the 39.74 territory, then we'll start looking at some lower levels, initially targeting the 38.74 mark. Now this has moved perfectly just, and now it's getting a hold up. This commodity is getting hold up near the this other hurdle that I talked about, this 38.74. Now, if this continues to slide below it, then of course, yes, further declines are possible. And what I'm going to be aiming here for is this upside support line taken from the low of the 9th of September. So, yep, keep your eyes on that one, guys. But at the moment, let's see how this commodity is going to behave today. It's just the beginning of the day, the trading day, and the commodity is already on a sharp slide. So yeah, a bit of a correction here probably could be possible, but again, at the moment it's a very tricky one. Probably I'll keep this one for now. Just I'm going to continue observing it, but if it stays today below this 38.74 territory, then yep, I'll continue targeting the downside. Bitcoin. Bitcoin quick update here. I talked about this one, and basically what I was saying, that I'm still considering this idea of a potential maybe a little correction here to the downside, as long as this 13,174 territory continues to provide resistance. As you can see, it continues to do that. Yes, we keep getting these overshoots, but they're all false breakouts, because at the moment it seems that the crypto is struggling to overcome this highest point of July of 2019, and that's why for now this barrier here, that's what I'm going to be keeping an eye on, the highest point of July 2019. If it continues to struggle to overcome it, then yes, like I said, a bit of a correction here back down could be possible towards this potential support area between the 12,405 and 12,490 levels, which are marked by the high of the 18th of August and the high of the highest point of August, respectively. So that's why for now, yes, if we do see a continuation hold up here below the 13,174 territory, then consider maybe a bit of a correction to the downside. If it suddenly pops above it nicely here, then yes, I'll continue aiming higher, and then I'm going to target this highest highest point of 2019 near the 13,764 mark, so approximately around there, guys. But again, we would need to see a nice good daily candle kind of staying above this 13,174 territory first. In terms of the downside, I would like to see a nice good drop below this area that I've mentioned earlier, and then yes, I will consider a bit of a larger correction to the downside. Jumping into a few pairs, AUDJPY, and here last week I've mentioned briefly this pair, and what I was saying that if, yes, the fact that it managed to rebound from this 200-day EMA, that's great, but if it climbs back above this hurdle right here, the 74.96 territory, which coincides with the 100-day EMA, then yes, maybe we could see a bit of a larger correction here to the upside, because don't forget that the pair is still trading below this downside line taken from the high, the 31st of August. So in a way, if we do see a push above this 74.96 territory, then yes, we could go for this larger correction and maybe even this time a break of this downside line. But again, let's not rush into anything yet. Let's first see how this is going to behave here, because even with the downside, I cannot really talk about the downside until we get a nice good drop below the 73.97 territory, because again, all this area is a little bit tricky. We can see that the 200-day EMA proved once again that it's a good area of support. It can be a very good area of support, as it, for example, as it did here in the end of September. It did the same trick here in last week. So again, if we did see a nice drop this time below this 200-day EMA, then yes, of course, it increases the chances for a potential further move lower. But yeah, a drop below the 73.97 territory could just do the trick, that better trick for more sellers. Now, USDJPY here is a slightly different story. You can see that the US dollar is a bit stronger than the Japanese yen. So the commodity-linked currencies like Aussie and New Zealand dollar are a little bit on a decline. But here, for example, USDJPY is trying to climb back up. But as I mentioned to you previously, I'm looking at this 104.95 territory right here, marked by the inside swing low of the 2nd of October. So at the moment, the pair is struggling with that barrier. I need a nice good push above that in order to maybe go for slightly higher levels. At the moment, I'm not getting that, so I'm just leaving this one for now, because even with the downside, I need to see a break of the short-term upside support line taken from the low, the 31st of July, and then yes, lower levels maybe could be met. But at the moment, it's not giving me that, so it's currently testing this 104.95 zone. So let's see how it's going to continue behaving around it. GBP Aussie. Now, GBP Aussie, on one side, on the positive side, it's still trading above this upside support line taken from the low of the taken from the low of the 11th of September. There we go, 11th of September. But after last week's test of this area right here, the area is slightly above this 200-day EMA near the 1.8527 zone here. So it tested that level and then reversed back down. So at the moment, probably this idea, I'm going to consider this idea here, where if this area right here, this 1.8288 zone can provide good support, maybe then yep, we could see maybe a nice rebound. Oh, actually, let me just reiterate that, guys. I mean, that's not gonna be really these are one of those where you start talking, you think that it's gonna work out, but that's probably not gonna work out. So probably let me rewind on this one a little bit, and what I'm gonna say here is that basically, I'm not going to consider any levels here for now. What I'm going to keep an eye on is this 100-day EMA shown as the green line. And of course, I'm going to keep an eye on this upside line as well, because if this area will provide good support, then yes, we could see a nice rebound and a push back up. Now, in terms of the downside, now this is where I'm going to keep an eye on the level. For example, this one, the 1.8180 zone, approximately around here. Because if we get a break of this upside line and then we see a drop below this hurdle as well, that's when it would also be, the rate would be also placed below the 21-day EMA, and maybe more sellers could see this this is a good opportunity to step in. So that's why be very careful, guys. Be very cautious. For now, yes, the pair is struggling to kind of find a good rebound place, but if it does find that rebound area from, well, not from, but around this 100-day EMA and this upside support line, then yes, it could lead the pair back up here. But if we get a break of this upside line and then the drop below this 1.8180 territory, then yes, we could consider maybe lower areas. So again, it's a very interesting spot right now for GBP Aussie. Again, let's see which of the weaker currencies are gonna overpull which one. I mean, if we can say it this way, but at the moment, yeah, that's the kind of the battle of the weaker ones. So let's see how that's going to end up being. But yep, keep your eyes on this little territory right here. Now, quick update on Euro Turkish Lira. I mean, last week, guys, I talked about this one, and I told you guys, don't try to short it yet, because yep, like I said, keep your eyes on this one, because at the moment this is a bit of a problem here for the short sellers. So at the moment, again, it still continues to rise. It's currently sitting at near the 9.50, just slightly above the 9.50 mark, and at the moment it's very difficult to find a good reversal here. So basically wait for that confirmation break. At the moment, probably at this point in time, I would prefer to wait maybe for a drop below the 9.2151 territory right here, and then yes, I could consider maybe lower levels, because at the same time the rate would be placed below the 21-day EMA here. Now, jumping into Euro USD, and by the way, I can see that there's a comment in the chat room here, John Poole. So I've explained that in my Traders Tea Time on Friday, but just a quick basically recap. So in terms of the RSIs and MACDs, for example, here, I mainly concentrate on breakouts, so basically the Dow theory. So at the moment, I mean, not at the moment in general, I mean, I do look at sometimes at the RSI and the MACD, but mainly for kind of trying to find a nice positive or negative divergence, and because these indicators, yes, they're sometimes can be useful, but don't forget that they're lagging. So sometimes you can have a nice breakout, and but the RSI, for example, is not showing that yet. So that's why I tend to kind of look at the overall picture. If I see, for example, a nice divergence, at this point, for example, I don't see one, but if there is a nice divergence, then yes, this is where the RSI might come in handy. But like I said, it's at the moment, let's say, for example, looking at this picture here, the RSI is above 50 on the daily chart here, which shows positive momentum. But you can see that, for example, there is a little bit of a decline here. The RSI is pointing to the downside, of course, but overall, yes, it is positive momentum. It could be that this will reverse higher. However, looking at this Euro USD, for example, for me at the moment, yes, I'm keeping an eye on this 1.1831 level that I mentioned last week, but I would prefer to wait for maybe a push above this area, somewhere around here, above the 1.1867 territory, in order to get a little bit more excited with the upside. Now, again, that's why, I mean, the RSI might not show that straight away. So, but if we do get a nice pop here, then yes, maybe this could open the door towards some higher levels. Again, it's everybody's preference. I mean, maybe you do like to use it, so that's fine, absolutely fine. I always say that everybody needs to find their own kind of way, their own strategy, and what I'm delivering here to you guys is that basically it's my kind of view, and again, I might be wrong. Probably could be wrong, but like I said, for now it kind of seems to be working, so I'll stick to my plan. When it stops working for me, then yeah, I'll try to find something new. But at the moment, yes, I'm basically mainly focusing on some of the EMAs here. That's what I do like to use. But yeah, at the moment, and coming back to the euro-dollar situation here, for example, at the moment, probably I'll take a bit of a neutral stand on this one. Yes, it's still floating above all of its EMAs here, especially above the 21-day EMA. But as I said to you guys, I would prefer to maybe wait for a push above this hurdle right here, this 1.1867 territory, and then kind of aim for some higher levels, because at the moment it's a little bit tricky here. And on euro dollar, you're welcome, John Poole. Yep. And at the moment, like I said, yep, I'll keep an eye on this one. I'll keep an eye on this barrier. If we do get a nice push above this, then yes, I'll aim for some upside. But at the moment, it's just nowhere. And even with the downside, I know that my level is from here, somewhere from around the 1.1696 territory. But to be honest, it could be the safer game here. If you're looking for something more short term, then keep your eyes on this little drop here, this low of the 23rd of October on the Friday's low, which is around the 1.1787 zone. And if we get a drop below this might also place the rate below the 21-day EMA and could open the door towards some lower areas. But the only thing is that at this point in time, the 21-day EMA wouldn't really work, because as you can see here, for example, in October, from the beginning of October, it kind of the rate was moving up and down above it. So basically it was oscillating around this 21-day EMA. So this is where it probably wouldn't work on focusing too much on the 21-day EMA, but mainly focusing on some of the support and resistance levels. And in this case, at the moment, you could keep an eye on this 1.1867 territory. A nice good pop above it could open the door towards higher levels, and then yep, I would prefer, personally, I would prefer to see a drop below this 1.1696 territory first, and then aim for the downside. So guys, I really hope you found it useful. I'll have to wrap it up here because the other session, my colleague is jumping in right now as well. So yeah, thank you very much for joining in, guys. I really appreciate your comments and I appreciate your likes, guys. I really do, and that means a lot to me. So I hope you're finding it useful. If you want to catch my video later on, my trader's tea time is always 14:15 GMT time, because we've turned the clock now. So yep, 14:15 GMT time. Thank you very much, and bye-bye.